Hello and welcome everyone. I'm Tom Bowley, Chief Market Strategist at earningsbeats.com, and this is Trading Places Live. It's Monday, April 26th, 2021, and I'm pre-recording this Trading Places Live for Tuesday, April 27th. Futures currently are up slightly across the Dow, S&P, and NASDAQ. Earnings season picking up, and of course, we're getting a lot of volatility as a result of that. Overall, though, we're going to get into several things. Going to go through the agenda to get things started. We're going to take a look at the daily market recap, what happened on Monday. Then we'll get into talking technically. I want to get through a couple of the indices, NASDAQ, small cap index, and the mid caps. Also have a few of the industry groups that I want to take a look at. Then we'll get into earnings analysis. It's a new feature that we've added at earningsbeats.com. And it's going back, taking a look at the initial reactions to all of the individuals or many of the individual stocks that have reported over the past few days, really since earnings season started. And this is going to be a spreadsheet that's going to be downloadable for our members. And you'll be able to sort, if you work with Excel, you'll be able to sort some of the columns and so forth, try to get an idea of what's been working in the market relating to earnings. I think it'll be a really good feature, something that might come in quite handy if you're a short-term trader. But I'll go through that, show you that spreadsheet. Then we're going to get into earnings spotlight, where I will feature some of the companies that reported after hours on Monday. And perhaps if we have time, talk about some of the companies that will be reporting on Tuesday. And then we'll wrap up the show with the three you must see. Three stocks I think are starting to show some very, very bullish features, two breaking out of downtrends and one actually just breaking out. So you want to tune in and stick around for that as well. Before we get into any of that, I do want to take you over to earningsbeats.com. If you are new to Earnings Beats, we have a free Earnings Beats Digest newsletter. It's published 3 times a week, Mondays, Wednesdays, and Fridays, normally out before the stock market opens. In order to receive that, simply type in your name, email address, hit that subscribe button. We'll make sure you get added to the list. There is no credit card required. It is completely free, and you may unsubscribe at any time. Taking a look at the action on Monday, Dow Jones Industrial Average was down 62 points, but just about everything else was up. S&P 500 up 7.5 points. NASDAQ up 122 points, almost 1% on the day. Mid caps up 12.5, which was almost 0.5%. And then small caps up more than 0.5%, up 7 points on the day. So really good action again on the market, despite the fact that the Dow was a bit lower. Looking at the sectors, energy led up about 2/3%. Materials up about 0.6%. Technology up 0.5%. And then on the flip side, we had staples, one of the defensive groups, lagging and actually fell back below the 20-day moving average. But we did talk about that recently. We saw the PPO, which had rolled over. So while prices were moving up, the PPO was falling, and that's a negative divergence. And normally when I see the negative divergences appear, I don't necessarily look for that rising 20-day moving average to hold as support. Instead, I look for more sideways consolidation, perhaps even selling down to that 50-day moving average, looking for the PPO eventually to move toward the center line, that zero line. And that's apparently what we saw start on Monday, with staples down more than 1% and falling below that 20-day moving average. One of the individual industry groups I wanted to point out, and I'm going to talk about this again in just a couple minutes, but the financial administration stocks looking really strong after the big run up that we saw in February. We pulled back pretty substantially in March, made another run into April, and currently trying to make a breakout. So got a little bit of a cup, a handle back to the 20-day moving average. Last couple of days have been strong, and we are nearing a breakout. That's one that I would watch, one group that I think could continue to tack on some additional gains. Moving on to the 10-year Treasury yield, I do want to point out that on Tuesday, we'll have a few economic reports out. February Case-Shiller House Price Index up the estimate is for a rise of 1.1%. January showed a rise of 1.2%. But again, we are looking in the rearview mirror all the way back into February at these reports. We're getting ready to head into May, so I think that this data is very stale. And honestly, I don't know that the market will react much either way to these reports. Another February report in that housing area, the FHFA House Price Index, expected to rise 0.9% for February after January was up 1%. Again, though, February reports, I'm not sure that the market really cares. April consumer confidence is due out in the morning. The estimate there is 112 even. March was 109.7. So we are looking for a push to the upside there. Tomorrow does begin the FOMC meeting. So that goes Tuesday, Wednesday, and we'll be getting a policy statement on Wednesday at 2 p.m. Eastern. I'm not expecting anything really to hurt the market. I think that the Fed continues to be very dovish, very accommodative, and I don't see anything really changing there. It's very, very unlikely we'll see any kind of a rate change. I don't think anybody's looking for that. And I think that their wording is going to remain very consistent with what we've heard in the past. I think the Fed is looking for growth to continue to pick up. I think the Fed is continuing to look for transitory issues with inflation. I think that the inflation numbers will continue to rise over the next couple months, but I don't think the Fed is looking for anything long-term there. So I just don't see the Fed doing anything really to harm this rally that we've been seeing. I think the stock market continues to move higher. Looking at the 10-year Treasury yield, I mean, it's played out. If you go back a month ago, talked about this as the 10-year Treasury yield kept moving higher. We saw that PPO roll over, and that double top, by the time we came back up and tried to break through that double top, the PPO had fallen over quite a bit. And as a result, that negative divergence suggested that we would see a centerline test on the PPO and a 50-day SMA test on the yield itself. And we've now seen both of those. So I think at this point, the yield is free to move whichever direction it wants to go. I would be looking probably between about 1.50%, 1.75. I think eventually we're going to break out above 1.75. I just don't know if it'll happen now or maybe later this year. But the PPO, now that we're back at the center line, that's the first time we've seen a center line test since back at the end of September. You can see that right here. And so I think the uptrend continues, but I think we may have to deal with more sideways consolidation first. Moving on to talking technically, wanted to point out the NASDAQ. I'm going to annotate this chart. This was a chart that I put into our daily market report today for our Earnings Beats members. And what I'm looking at here, and I really look at this one of two ways. And both of these are bullish scenarios. But you can see the equal high right there. I'm going to go back here into September. I want to show you this as well. So you can kind of see we had a very similar type of scenario back in September. We topped, we went back down, came back up, put in another equal high, roughly equal high, and then another higher low, and then another equal high. So let me just draw this line in here. And I think you can kind of see, if you're familiar with technical patterns, off of an uptrend, this was a pretty nice, easy to see ascending triangle on the NASDAQ. And that 12,000 level was the top. And then initially we went down to 10.5, came up almost to 11,000 on the next low. So you can see the rising lows, the equal highs coming across. Anytime you see this kind of a pattern after an uptrend, it's a bullish continuation pattern. And what we look for is a breakout to continue that prior uptrend. And that's what we saw at the end of November, early December. We made that breakout. Normally, when you look at that, you want to go from the top to the bottom, which would be about roughly 1,600 points from the top to the bottom. 12.1, add 1,600, that'd be 13.7. We ended up going just above 14,000 before we ran into another similar type pattern. Now, you might look at it and say, well, here's your, ascending triangle again. Same thing, right? I mean, you've got the rising lows and you got the equal highs. There is a subtle difference here. This first move down. So this is, I'm going to go back to the September one first. So What you normally see with an ascending triangle is A, B, C, D, E pattern. So your A, C, and E are equal highs. The B and the D are rising lows. That's what you look for in this pattern. And that's what we had back September through November. In this pattern, here's A and here's B, but this push back to the upside is not C because you don't get all the way back up to the high. So C to me would be way over in here, maybe even the Monday close. We're just about back to where we were at the mid-February point. So this could be A, this could be B, this could be C way over here. And we could still have another push to the downside, which would be D, before E comes along and we make the breakout. So that's one potential pattern. The other thing that I would say is that if I'm going to do this in a different color so you can kind of differentiate. But if I take this high right here and I come down here and I could just, I'm just going to put it here right in the middle somewhere and then do like that. I mean, essentially, you could look at this as a cup. It's not, perfectly symmetrical. It's not perfectly rounded. But when you get a move up and then you pull back and you start working your way back and then eventually make that way all the way back up to the high, that could be viewed as a cup. And then a little shallow handle, maybe even, I'm going to actually move this just a little bit, because if I take this and move it to here, you can see the cup here doesn't quite get back up to that high in mid-February, but then you have a handle back to the 20-day moving average, and potentially this could be a breakout. So I don't think it really matters which pattern you use, because both of these patterns are continuation patterns that are very bullish, and you look for confirmation and breakouts in the direction of the prior trend, which in this case was to the upside. So anytime you go through these continuation patterns, you expect that you're going to get the breakout. And I think we're going to here on the NASDAQ. The only question I have is, do we play out with this ascending triangle? Do we get this, one more move to the downside like we had back in October to establish that D point in the pattern, which would be maybe back down to 13,250. Maybe if it's over the course of the next couple of weeks, maybe it goes down to 13,500 and we hit that trend line coming across. Very difficult to say, but like I mentioned, both of these patterns are bullish continuation patterns and do argue for higher prices. So I wanted to point that out. Moving on to the small cap index, we're starting to see strength again in small caps. So after pulling back in March, the reaction high went up to about 1350, came back down again. Next reaction high also at about 1350. Well, we closed at 1357 today. So it looks like maybe in the short term, we are breaking back up above these reaction highs near 1350. And that suggests to me that we're probably ready to make a run for 1400 and test that mid-March high. So small caps to me are starting to look a little bit more bullish. The mid caps, we've already broken out. Mid caps and small caps were going hand in hand for a while, but mid caps actually performing much better than small caps. And while small caps still have a room, ways to go to get back to that mid-March high, mid caps have already broken above that mid-March high. So that, we didn't quite get to 2,700 on that run, but now we're well above 2,700, closing at 2,758 on Monday. So it looks to me like mid caps are very strong. You've got small caps strengthening. You've got the NASDAQ in a bullish pattern, whether you look at it as a cup with a handle or an ascending triangle. So it just looks like the market still just wants to keep going higher based on these various patterns, based on the long-term trend. And I wouldn't bet against this market. I've been saying this for a long, long time. And I think the market's going to go a lot higher. I think it's going a lot higher than people think. And it's going to last a long time. I'm looking for the Fed to continue to raise its forecast for GDP throughout the year. I think rates, while we are likely to see higher rates in 2021, I still think by historical standards, they're going to be extremely low. And I think that environment, strong growth, pent-up demand from the pandemic, combined with still historically low interest rates, I think that's going to be nirvana for U.S. equities going forward. A couple of the other charts I wanted to show you, and I'm going to get into a couple of the industry groups. Let's take a look first at the financial administration stocks. So this is the Dow Jones U.S. Financial Administration Index. You see the high here in mid-February, equal high here in April. I think that looks to me like a cup. Maybe not exactly rounded, but still same kind of a principle here. We've gone back, tested that 20-day, and now we're making another run to the upside. Look for a breakout. I think it's coming here on financial administration stocks. Now, a couple of groups that have actually pulled back a little bit. One is the gambling index. And I think that this low right in here at about 920 or so on a closing basis, I think that's going to hold. Maybe you can go down to 900, which is where these tails bottomed back in the first week of March. And then also last week, we saw moves down to about 900, which held. So let's just call it 900 to 920, that range. We're currently sitting at 954, but just a month ago, we were 100 points higher on this index. So I wouldn't be surprised to make another run for that level. And if the gambling index can get all the way back to 1050, I think that could set up some nice trades in that area. The other group I wanted to mention is hotels. Hotels also, well, they've actually rebounded a little bit, but they've been consolidating. We made a move up to 2,600 back at the end of February. We tested that level in mid-March. We got close again about a week and a half ago. And then on Monday, today, we got up almost to 2,600, very close to this level again before backing off. So we're consolidating off of an uptrend in sideways or rectangular fashion. A close above 2,600 would be very bullish. And so keep those hotels, in focus as well, because if we do get the breakout on the index, I'd be looking for some of the individual stocks to perform really well also. All right, let's move on to earnings analysis. So what I wanted to do today is I wanted to show you, this is a spreadsheet that was just created for our Earnings Beats members. We're getting ready to add it to our website, which can then be downloaded by our members. But if you look at this spreadsheet, you'll see that each day, so we've got April 14th, then we go into April 15th, April 16th, then the 19th, 16th was a Friday, so the 19th is a Monday. Then we got the 20th all the way through the 26th. So you can see a lot of companies on this list. So I've got the ticker symbol. We've got the sector that it belongs to, the industry group that it belongs to. And then over here on these columns, we've got the prior close. So this is going to be the closing price just before earnings are released. So on the 14th, these were actually companies that reported in the morning on the 14th. So the prior close would have been the 13th. So on April 13th, JP Morgan, JPM, closed at 154.09. Then on the 14th, they reported earnings before the market opened. The opening price was 150.147, and the closing price that day was 150.121. And so in this analysis, I just have three different percentages that I'm looking at. The first is the initial reaction. So we're looking at where did we open after this new information came out on earnings versus where it had closed prior to that news coming out. That's the initial reaction. So it's the gap up or the gap down. Then I've got a one-day change column here, which is looking at the closing price after earnings have been announced versus the closing price the day before earnings were announced. That gives us just one close to the next. What did it do over the course of the 24 hours? And then this last column is one that I think is pretty important. And this is what happened after the gap in the morning from the opening gap to the closing price. Did we go up or down? And I think it's really important to see because any stock, you can see all kinds of, volatility with the opening gap. both to the upside and the downside. But the true demand or supply of a stock, I think, will be seen more from how the stock trades throughout the day. Market makers can kind of manipulate price action at the open, but really after the market opens, you're going to have volume coming in with all this new news and what actually happens during the trading day. And that's what this column represents. And I've mentioned Wells Fargo as a bank that I think's turned the corner. And look at that move during the day. 5.77% during the day. The initial reaction, we actually gapped lower by about 0.25%. But by the end of the day, we were up 5.53%. And so that means during the day, we actually gained 5.77%. That's telling me that there's a lot of demand for the stock throughout the trading day, a lot of buyers. And I think that's important. Now, as you look at this, I mean, we can go by day and take a look, but I also have these tabs that are going to be available for our members as well. So this is sorted by opening gap. So this is going to tell us the stocks that have had the best reactions at the opening bell to their earnings reports. And this is from April 14th to April 26th. Here are the companies in order. Now, we're going to continue to build on this spreadsheet so that by the time we get through earnings season, there are going to be hundreds, even thousands of companies on this list. So you're going to be able to take a pretty quick look to see the companies that had the best reactions to their earnings. The next tab sorts by that one-day change. So looking at the close one day to the close the next day. And then the final one is going to be sorted by intraday. And here you can see this is where a stock, how it trades during the trading day. Now, these are the numbers, but just take a look over here at how many banks are at the top of this list. That's a lot. Now, granted, many of the companies that have reported thus far have been banks. We've had a lot of banks report. They tend to be among the first industry groups that report their earnings. But banks, there's a ton of these banks that maybe didn't have great initial reactions, but when they gapped down, they came roaring back. And so got a lot of these open to close changes, very positive open to close changes. And I think you might want to take a little closer look at companies that do that. Because again, to me, it's a little bit more of an indication of real demand versus market maker manipulation, telling us where a stock is going to open or close. And so anyhow, I think it'll be great information. We're going to be using it to analyze it ourselves. I'll be talking about it here on my shows. I'll be talking about it in the daily market report that goes out to members every day that the market is open. I'll probably be writing blog articles about it, and we'll also make this available to our members at Earnings Beats. And you can be just a trial member, which is a free membership, and you'll be able to download this information. But we should have it, most of earnings will be done by about mid-May. And so that'll be very, very interesting to see how this information correlates to how stocks perform later in the quarter. So something that we'll be wanting to continue to look at and monitor for our members. All right, let's move on. I'm going to move over now to the earnings spotlight. And with the earnings spotlight, we're going to start off with Tesla. So Tesla reported after the bell. The good news is that Tesla beat earnings expectations, 93 cents versus 79 cents. I think that's going to be very typical of what we're going to see throughout most of the week. Most companies are going to report better than expected numbers. But the question is, are they going to go any higher? Because when you look at a stock like Tesla, last year it made such a huge run. I mean, you can just see here from May through the beginning of the year, beginning of January, what is that, eight months? We went from 150 to 900 in 8 months. So we're still consolidating, trying to digest this big move. I don't think Tesla's anywhere near being done, but could we consolidate for a while longer? Absolutely. So Tesla, after the bell, did report stronger than expected earnings, but was down about 2.5%. Not horrible. I think that was pretty decent reaction. And I'll be watching the moving averages, because if we roll over, go below the moving averages, then I think these recent lows come back into play. If we continue to hold the moving averages, watch for another breakout. That would be bullish and would likely send Tesla back up to the January high. All right, CDNS. This is Cadence Design. This is in the software space. I was interested to see what was going to happen here, because we had triple top up at about 148, 149. Pulled back, held the 20-day. It looked like we were ready to go. After hours, the stock is down almost 4%. So still got some work to do. We'll see if it's going to be a hollow candle. You know, we gap down 4%, but do we make it up and rally throughout the rest of the day? That's what I was kind of talking about. During the day, what happens? I think if we gap down and then rally, that would still be very bullish for Cadence Design. BRO, this is a company up 4.4% after hours. Brown & Brown. They beat their estimates 70 cents versus 56 cents. So an easy beat of the estimate. And the stock, like I said, up 4% after hours, probably going to take us up to about 52 or something in that neighborhood to open on Tuesday, and we'll see what happens from there. The best reaction I saw was actually a manufacturing company. This is Simpson Manufacturing, SSD. Stock's been consolidating sideways for the past month and a half. They did beat on their bottom line, $1.16 versus 92 cents. Stock was up 7% after hours. So it does look like we are going to get a breakout on SSD. There weren't very many misses in terms of earnings. I saw CNI reported 97 cents versus 99. But, you know, that along with one pretty significant miss by AJRD. And I'll pull that chart up for you real quick. AJRD. They came in with earnings 22 cents versus 46, but not much change. I didn't see any change after hours. So we'll have to wait and kind of see if there's anything going on there in the morning. But otherwise, pretty good action. MKSI did have a nice reaction to its earnings report. I think was up about 3.5%. The stock reported earnings 256 versus 217 expected. So it was up around 196, 197 after hours. Needs to open above 200 to really maybe forge that next level for the stock. On Tuesday after the bell, we will have Microsoft and Google both reporting, along with Texas Instruments. Some really big companies. Starbucks will be reporting. So things are just starting to heat up in terms of the earnings reports. All right, last thing, let's move on to the three you must see. And the first one I want to pull up is Sale. So this is a software company. Stock had been downtrending. And when I see these downtrends and I see the failure at the 20-day moving average, you need to get back up above it. We did that with Sale. Volume picked up. This is one to watch if we can get through that 50-day moving average. Next up, we've got Tenable, TENB, another stock that's in that software space. We had actually moved lower, went up, tested the 50, held the 20, and broke out again. That is very bullish action. I think a bottom is in. Look at the volume picking up. Really good action in Tenable. And then the last one I wanted to show you was the breakout, and this is on Skyworks Solutions. Sideways consolidation last couple of months. Beautiful breakout. Look at that volume picking up. Skyworks reports later this week, so this will be one to watch. All right, that's it for me. Everybody have a great day. Appreciate you tuning in. I'll be back over at earningsbeats.com on Wednesday morning at 9 a.m. for your next Trading Places Live. Happy trading, everyone.
Hey guys, Dave Keller here with StockCharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.